precious metal stocks, they are going to absolutely explode higher. Like I said, they should be 2 or 3x what they are today. I'm looking at a story that was in my column this morning. It says Bank of Montreal bullish scenario sees gold at $8,650, silver at $220 an ounce by 2027. India had to shut one of their physical funds last month or the month before because they couldn't get the metal. There's just so much going on right now that at some point, as some commentators have said, and I agree with them, we're going to see a discontinuous event to the upside. We're going to wake up someday and silver is going to be $150, $200, $300 an ounce. And like I said, the supply brick wall, when we hit that, then it's going to be just absolute pandemonium in the market.
Market analyst Ed Steer is echoing growing concern across the precious metals sector as supply constraints collide with rising demand. A recent Bank of Montreal bullish scenario projects gold reaching $8,650 and silver soaring to $220 per ounce by 2027. Physical shortages are already visible. India was forced to shut down a physical silver fund after failing to source metal. Steer warns that when silver hits the supply brick wall, the market could experience absolute pandemonium. According to commentators, a sudden discontinuous move could send silver overnight to $150, $200, or even $300 an ounce, reshaping the global metals market. Now, we present the clips from Ed Steer's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I would put money equally in both the physical metal and in the shares, but you're absolutely correct, Dunnigan. The value bet here is in the miners themselves, okay? They should be, like I've been pointing out for the last month now, the silver stocks that you'll have in your portfolio, look at the price of whatever they are, and they should be double or more what they are sitting at right now. Your stock portfolio, anybody's stock portfolio should be two times or more what it's sitting at today. That's how bad it is, the suppression is. So, some point, if they lose control or give up control of the share prices of the precious metal stocks, they are going to absolutely explode higher. Okay, like I said, they should be 2 or 3x what they are today. I'm looking at a story that was in my column this morning. It says Bank of Montreal bullish scenario sees gold at $8,650 and silver at $220 an ounce by 2027. When you see numbers like that, it's incredible to see them. And those prices, we'd be at those prices right now if they weren't suppressing the prices. But the fact that they're forecasting those kind of numbers should have the stock screaming to the upside. Like I said, double-digit gains every day, but it's not happening. But if you were a betting person, at some point, the amount of buying going into the stocks is going to overwhelm these guys. The price suppression. But at the moment, that's not happening. But that's where the value is. But I would tell everybody, I said, you don't put all your money in the stocks, you put it in the metal as well. But this is a market that it should be exploding, but it's being prevented from doing so. The Shanghai Gold Exchange and Shanghai Futures Exchange have the lowest inventory levels in 10 years. I mean, there's so much going on out there. There's such a dichotomy that just wants to make your brain explode, where, the amount of silver that's out there that's being sucked up is just absolutely enormous. But all of the ETFs, mutual funds, and depositors are bleeding this stuff like there's no tomorrow. I mean, you couldn't make this stuff up, Dunnigan.
You've been watching these exchanges as long as anyone. And so by you saying that these are extraordinary outflows and extraordinary inverted relationships between those outflows versus the price action and so on, is something we should all sit up and take notice of. Any conclusions, any explanations to you that seem to hold water of how this could be happening in such a historically unprecedented or non-intuitive way?
I said a month ago, when silver finally broke above $70, I said, we're in terra incognita here. I have no idea how this is going to turn out. We're in totally uncharted territory, uncharted waters. All we know is that the supply-demand deficit is now in its 6th year, and sooner or later we're going to into a brick wall. And you think 140, whatever silver's selling for, $112, $114 right now. That's going to be left in the dustbin of history. But it's just impossible to tell how this is going to turn out. I feel at some point that the Western financial system is going to have to step in here at some point, because their short position is just absolutely slaughtering them. The big four and big eight shorts, which are all the big commercial traders and the banks, mostly European banks now, American and European. Okay, I mean they're just absolutely bleeding in their margin calls that they get every day, since silver was like $9, and they've been short since it was $9. So, they're trapped there. There's just absolutely no way for them to get out. And we're seeing people buying physical silver. I mean, there's a physical silver shortage in India. I see another in my column today. There was another Indian ETF it was Chinese ETF that closed their fund because the premiums were so high. India had to shut one of their physical funds last month or the month before because they couldn't get the metal. There's just so much going on right now that, at some point, as some commentators have said, and I agree with them, we're going to see a discontinuous event to the upside. And we're going to wake up someday and silver is going to be $150, $200, $300 an ounce. And like I said, the supply brick wall, when we hit that, then it's going to be just absolute pandemonium in the markets. I don't know what they're going to do. But like I said, this is terra incognita, and I'm making this stuff up as I go along, as is everybody else.
Veteran precious metals analyst Ed Steer says silver markets have entered terra incognita as a sixth consecutive year of supply deficits collides with unprecedented physical demand. Steer argues the real value lies in undervalued silver mining stocks, which he believes should already be 2 to 3 times higher absent price suppression. A Bank of Montreal bullish forecast projecting gold at $8,650 and silver at $220 by 2027 underscores the disconnect. With ETF inventories bleeding metal, Indian and Chinese funds closing due to shortages, and commercial shorts trapped, Steer warns a discontinuous upside event could send silver to $150, $300 an ounce, triggering market pandemonium. Let's get back to the interview.
I haven't added up the numbers so far recently, but I can tell you right now that since the first of the year, over 30 million ounces of silver have been shipped out of the COMEX. Okay, that's physically put on trucks, put on airplanes or whatever, and flown someplace else. It is absolutely enormous. I look at the Shanghai Gold Exchange and the Shanghai Future Exchange numbers every day when they come out, and right now, both are sitting at inventory levels that we haven't seen in 10 years. Well, actually, it's more than 10 years now, because they're the lowest inventory levels they've had since late 2015. And I'm just going to pull up some charts here that Nick Lair's website in the last 4, including what's happened in all the exchanges in the last 4 weeks. There have been 37.7 million ounces shipped out of all the ETFs and mutual funds on planet Earth. So there's huge silver exiting everywhere. Zürcher Kantonal Bank, which is the largest silver ETF in Europe, has been bleeding silver continuously for the last 4 weeks. That includes SLV, which is down 14.7 million ounces in the last 4 weeks. The COMEX is down 34 million ounces. The only one that's up is really up big is Sprott. Okay, they're up 8,200,000 ounces, and India bought 23 million ounces last month. So, but everybody's bleeding it. iShares, you name it, Deutsche Bank, ZKB, all the other ones are just shipping silver out the door like absolute mad. That makes no sense whatsoever. Prices are screaming higher, and they should be silver should be pouring into these funds, everywhere, and it's just not happening. It's the dichotomy is absolutely enormous. The amount of silver that is owed to SLV is astronomical. Their new short position came out yesterday for position sells in the middle of the month, and I have the numbers right here because it was in my column this morning. The short position in SLV is 62.49 million troy ounces. That's how much is owed SLV, because as the price rises, those people they're shorting the shares to keep the silver price down, and in order to do that, they're supposed to put physical metal in to back these shorted shares, but they're not doing that. So in lieu of that, they're shorting the shares. So, SLV is supposed to have 1 ounce of silver backing every share that's out there, but the shorted shares have no silver backing them whatsoever, and it's totaling 62.5 million ounces. If the people who are short had to buy the silver to back those shares like the SLV prospectus requires, I can't imagine what 3-digit silver price we have right now. So on every front that you can see, silver is owed to SLV, but the thing is that everybody should be buying these funds, and they are, but the silver is exiting every mutual fund except for Sprott on planet Earth at a rate that, like I said, it's 38 million ounces has been shipped out of these ETFs in the last 4 weeks. And the Shanghai Gold Exchange and Shanghai Futures Exchange have the lowest inventory levels in 10 years. I mean, there's so much going on out there. There's such a dichotomy that just wants to make your brain explode, where the amount of silver that's out there that's being sucked up is just absolutely enormous. But all of the ETFs, mutual funds, and depositors are bleeding this stuff like there's no tomorrow. I mean, you couldn't make this stuff up, Dunnigan. The thing is, these tariffs and the Monroe Doctrine, this is a sideshow. It has nothing to do with what's going on in the precious metals world themselves. I mean, anybody with a brain that follows the precious metals equities knows perfectly well that with silver at $112 and the input costs around $30, all-in sustaining costs, the miners are making absolutely ginormous profits in silver, and they've been making ginormous profits in gold for years now. Now silver's just caught up, so they can see this, and they know the fact that the miners are doing well. I squawked about it once in a while over the last 6 months. Gee whiz, the miners just aren't keeping up with the moves in the precious metals, whether it be gold or silver. But it wasn't until somebody sent me the chart of SIL versus a silver price where I could see it for myself in the mid-September, where it was obvious that they were suppressing the prices. Now it's 1-to-1 instead of 1.5 or 1.6 or 2x. It's now down to 1x. Okay, so and the silver stocks are actually down. Are out underperforming the metal itself. So normally the market isn't normal now. Okay, it's instead of suppressing the metal prices, which they can no longer do because this is now a runaway bull market to the upside. Instead of doing that, they're suppressing the stocks instead. And you're like I keep repeating, you're better off to buy the physical metal. At some point, this will certainly break out, but I'm not sure when that's going to be. I'm looking at the silver price right now, and it's up 4.28%. And the junior miners right now, silver miners, are up 0.97%. I mean, that isn't the way it's supposed to be at all. The junior miners should be up double digits. We should have a double-digit gains in the silver miners and the gold miners almost every day for the last month and a half now, and it's just not happening. So instead of suppressing the price of the metals, which they can no longer do because of the short covering rally and everybody else piling in on the long side in the precious metal space, they're suppressing the precious metal stocks instead. So I don't know how long they can keep this up, but it's now so obvious that even Stevie Wonder could see it.
Ed Steer reports that more than 30 million ounces of silver have exited the COMEX since the start of the year, while global ETFs and mutual funds have shed nearly 38 million ounces in just 4 weeks. Inventories at the Shanghai Gold Exchange and Shanghai Futures Exchange have fallen to their lowest levels since 2015, highlighting an accelerating physical shortage. Despite silver prices surging above $110, mining stocks remain suppressed, defying historical behavior. Steer points to an unbacked 62.5 million ounce short position in SLV as evidence of systemic stress, warning that once physical supply overwhelms paper markets, a 3-digit silver price could emerge rapidly. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.